Hi everybody, it's Terry Ryder from Hotspotting. This week, Domain released its price forecast for the major cities of Australia for next year, and in a forecast that's really rather bullish compared to some of the stuff we've been seeing in mainstream media recently. Domain is one of the two biggest sources of real estate price and other information in the country. It has one of those online sites where you can go and search for properties for sale in competition with realestate.com.au, and also it's one of the major sources of data on prices and rentals across the country in competition with CoreLogic. So its forecast for next year and the year before are rather interesting, and I think kind of pertinent. So what's interesting to see in what they're forecasting for house prices in the major capital cities and also for apartment prices is that it's taking a fairly optimistic outlook for next year and particularly for the year after. So if we look at what it's recording with house prices for 2018, its numbers show that 3 of the capital cities have negative numbers. But next year, only one of the capital cities it's forecasting will have a negative figure, only a slightly negative one, and the year after, all of them will be in the positive. That's for housing. For apartments, it's forecasting all the capital cities to be in the positive next year and the year after. So a lot more optimistic and bullish, and I think realistic, than some of the headlines are suggesting. What's interesting to me about this press release by Domain this week is that it put out its press release containing its forecast for next year and the following year a couple of days ago, and to date I haven't seen it reported in any of the major newspapers in Australia at all. Now, I'm quite certain that if their forecast had been sensationally negative, it would have been on the front pages of all our major newspapers, but because what they're predicting is fairly moderate and overall quite optimistic, nobody's reported it. Isn't that sadly typical of our news media, particularly our major newspapers at the moment? So it's up to entities like us and some of the more specialist property publications to let you know what one of Australia's major research companies in residential property is expecting to happen next year and the year after, because you're not going to read about it in our screaming tabloid newspapers. So for next year, for housing, what Domain is predicting that the price decline we're currently seeing, generally speaking, in Sydney and Melbourne, will be coming to an end, and both will be about zero next year in terms of what their prices will be doing, and the following year they'll be returning to solid, though fairly moderate growth according to this forecast. The overall average situation with the Australian capital cities, according to this forecast, will be slightly in the positive next year, but for Brisbane, Perth, Adelaide, Hobart and Canberra, they're predicting pretty solid price growth. Most of these forecasts, by their nature, are fairly conservative. Most forecasters of prices up or down in Australian real estate tend to err on under forecasting. They like to understate the growth rather than overstate it. So bearing in mind the conservative nature of these kinds of forecasts, they are fairly optimistic. So if they're right, I'd be expecting some pretty solid growth in some of these capital cities, particularly the smaller ones next year. And certainly we're seeing Perth recovering, and they actually have Perth leading on price growth next year. We certainly don't disagree with that. All our research shows that the Perth market is now moving into a recovery phase. They're predicting bigger and stronger things for Brisbane, and we tend to agree with that as well. The ducks are starting to fall in line for Brisbane to perform better. It's saying that the current strong growth in Hobart will be less next year, and it's seeing a continuation of Canberra's solid performance. Canberra's always pretty solid. Never seems to boom, never seems to crash. It just plods along pretty solidly, and that's forecast to continue by Domain next year. So most of the capital cities in the positive next year, and the capital city average is a slightly positive figure. According to Domain, the following year, all the capital cities, including Sydney and Melbourne, will be producing solid price growth in the housing markets And overall, the average for the Australian capital cities will be a 4 or 5% gain. And again, yeah, they're not going overboard with what they're predicting. I think we're actually going to see better growth than they're predicting in some of our capital cities. I think Adelaide's going to do better than they're predicting. I think Perth and Brisbane are probably going to have larger numbers than they're predicting, although they are positive numbers in these forecasts. And I think Canberra's actually going to be better as well. But what's most interesting is that what they're forecasting for the housing markets is that next year, the price decline in Sydney and Melbourne will come to a halt, and the following year they'll be back in growth again. Now, it's even more optimistic overall for the apartment markets. Their forecast for next year is that all of the major capital cities, well, that's all of the capital cities except Darwin. They don't, for some reason, they don't include Darwin in these numbers. The other 7 capital cities are all here, and they're predicting that all of them will be producing some sort of growth in their prices next year, including Sydney and Melbourne. It's noteworthy that the 2 biggest cities in the last 12 months, the decline in prices overall, according to most of the published research figures, is less for apartments than it is for houses, and that's reflected in these numbers. So they're predicting Sydney, Melbourne, Brisbane, Perth, Adelaide, Canberra will all have some sort of growth in the apartment markets next year. And again, the following year, slightly more in 2020, according to these figures. So that's what Domain thinks. And as I just to reiterate, that Domain is one of our major research entities and sources of data for residential property, has been for a long time. I think they're one of the more credible sources of data. They're certainly a lot more careful with their data, in particular about the integrity of their figures, than some of the other major sources who shall remain nameless to protect the guilty. Certainly that's been my experience of it. And when we, in the hotspotting business, buy raw data to do some of our research, this is where we get it, because I think they're a much more reliable and careful recorder of real estate numbers than some of the other big research firms that are a little bit more publicity driven, rather than a desire to inform people with good data. So I think they're worth listening to. And so it's significant, I think, that they are forecasting fairly positive outcomes in major real estate markets around Australia next year, and even more so the year after that. And the other significant thing, as I said, is that none of the major newspapers have reported these numbers this week, but anybody who comes along that forecasts 20 or 25% decline will be on the front page. That sadly is the mentality of journalists in this country, particularly when reporting the very important housing market at the moment. Sad but true. Okay, that's it for now. Terry Ryder signing off. Let's do it again soon.